Back to the show. Some of the biggest corporates in Kenya and East African markets are reporting their earnings for the 2022 full year period. From Stanbic Kenya's robust 25.7% net profit to MTN Rwanda's 20.8% jump in EBITDA, the earnings season is now well underway. Joining me now to put facts behind some of the earnings releases in that region is Aly Khan Satchu. He's the CEO, the Chief Executive Officer at Rich Frontiers. Thank you very much for coming on the show tonight, Ali, and we apologize for keeping you late this tonight. It's about 9:30 over there in the East Coast. Tell me, which big sectors earnings are coming in from the Kenyan market right now? I saw Stanbic Kenya. Tell me who else is delivering some big numbers.
So as you said, Stanbic was the first bank to kick off the full year reporting season. Strong underlying numbers. Stanbic has a very strong franchise here in Kenya and in the East Africa. So strong numbers, good dividend increase, very positive story all round. We're looking forward to the other banks reporting. The banks are, alongside Safaricom, the big beasts at the Nairobi Securities Exchange, which unfortunately has been under some significant selling pressure, with Safaricom leading the way down. But investors looking for the banks, and we expect a slew of these earnings practically daily going forward.
But what are the facts behind some of these big earnings, in particular for the banks in Kenya? Where do they make money from, my friend?
It's interesting. It's a very interesting question. Look, they've been making a lot of money from just buying government securities. Banks here hold, on a ratio basis, about 300% of their capital in Kenya government bond securities. This is actually a double-edged sword, and I can touch on that momentarily. But they've been earning a good income off those securities. We've seen a gentle pickup in demand last full year from the loan side, and then of course the majority of these big banks have very robust mobile lending platforms, and these have also performed. So it's all round. A pretty solid slew of earnings. But as I said, the challenge is going to be around the valuations being placed on government securities. We've seen a significant increase in yields over the last few weeks and months, and therefore some of the challenges are not dissimilar to what the banks in the US have been witnessing over the last few sessions.
Well, interesting time when you look at the macroeconomics in Kenya under the new President William Ruto and the monetary policy environment under Patrick Njoroge. Recently, the Central Bank of Kenya allows 24 banks to raise rates on credit to consumers, while some of the big boys like Equity Bank and others were denied. So mix the macro and the monetary policy environment for me as to the expectations on the earnings from the Kenya's banking space.
So, GDP growth has been fairly resilient. So, I mean, that's been a net positive. The challenge has been the overall borrowing profile of the sovereign, which has been pretty high, and therefore interest service and debt repayment is taking up a lot of the government of Kenya's income, putting pressure on them. And this remains a challenge. I estimate it to be a net shortfall of about $4 billion that the government needs in order to stabilize the fiscal position. I think they're trying quite hard to find a solution. The latest attempt was to get credit from the UAE on the purchase of fuel. Fuel is our single biggest expense item, about $500 million per month. They're looking to kick that can down the road and create some free short-term money from that perspective. Patrick Njoroge, the current central bank governor's biggest challenge really is the foreign exchange rate. Here we've seen a slide in the shilling and a very wide bid-offer spread, something we've never seen. It's nearly 10 shillings between the buying and the selling price. And clearly, the regulator is unwilling to find the clearing price for the Kenya shilling against the dollar, which is obviously and self-evidently considerably lower than where we are now. These are the challenges that the country is facing at the moment. But meanwhile, our banks have captive savings deposits, which are very, very cheap. There has been some more competition for big ticket deposits as T-bill rates have ticked over 10%. But overall, the tier one banks have solid franchises. They've expanded in the region. Equity Bank, which you touched on, of course, has gone great guns in the DR Congo, which remains, in my view, the jewel in its crown. So there's a case for the big banks. But as I said, there are challenges on the horizon. They've been under some selling pressure of late, but I think that's been more of a function of foreign investors looking to reduce risk in Kenya because of the FX situation.
Other earnings in the region, but let's go straight to the biggest story on planet Earth right now. As far as banking sector is concerned, the collapse of Silicon Valley Bank, SVB in the US. What's in that particular, this fiasco for you? Do you think there's a learning curve for the folks in Kenya or East Africa?
Well, yes, I do. I think, the challenge here is what you had was, this callable deposits being invested in long-term US government paper. You had significant deterioration in the value of that long-term US government paper. And then you had deposits fly out the door, $42 billion in the space of 24 hours, which speaks to the speed of banking these days. So my comparison with the Kenyan banking sector is they too have been investing in Kenya government paper, long dated. They've got a better profile in terms of the deposits. They are much stickier, but we've seen a significant deterioration in the value of Kenya government bonds. And in the secondary market, there's a lack of liquidity. It's practically seized up. There is very little trading. Therefore, if you were to apply the same logic that was applied in the case of the banks in the US, you could say there is potentially a similar scenario which could unfold here as well. But I think on balance, that is the negative outlook on it. The more positive outlook is that they've got strong earnings. They've got very wide net interest margins, far wider than you get anywhere else in the world, and underlying organic growth in most of these banks remains muscular.
Very interesting views there. Thank you so much. We really appreciate your time and those insights into Kenya and the wider global marketplace. Thank you so much. Have a pleasant evening and see you next time. Aly Khan Satchu, the CEO at Reach Frontiers in Nairobi. Thank you.